Hi there, everybody. Welcome to the webinar. We're really glad to have you in our room today. Max members, welcome. Non-members, welcome. Some of you are brand new to the Max community, and we welcome you as well. And we look forward to a good experience together today. I'm here along with Chris and with Eusebio, and we have twisted Eusebio's arm and prevailed upon him to share with us again out of his wealth of knowledge regarding the Brexit situation. Regardless of your politics, regardless of your level of interest in the politics of it, Brexit is going to affect your trading one way or another, almost no matter what instrument you trade. And so we're very glad that Eusebio has agreed to share with us and give us some helps as to some things that we can look for, some things that we ought to be aware of as traders. So again, thank you very much for your time, Eusebio, and the room is yours.
Thank you very much, Craig. Welcome to everyone in this presentation today. Before starting, I like, as usual, to make a quick audio and video check. Do you see my screen? I'm showing the first slide of my PDF. And do you hear me well? So a yes or a Y, either in the question area of GoToWebinar or in the chat, in the Max chat room for the Max graduate would be appreciated. Oh, fast yes or Y or AV for Jan, for example. Okay, thank you very much. I really appreciate. So what are we going to cover today? I will, with a few words, make a very quick historical summary of the Brexit history, because we have lived for the last 3 years some very interesting events with the Brexit, and then we will see on the chart what has happened on the pound, so the pound pairs, during all that period, which was a period dedicated to the negotiations for UK leaving the European Union. And so we will see the impact of these events, so during all that time period on the pound pair, depending on the type of event. And so what I will consider after that is I will consider some general forecast. There has been some forecast published over that time period at the very beginning after the referendum in 2016 and during the period, especially in 2018 and in 2019. I will consider, for example, a forecast made by the Bank of England in November 2018, so just a few months ago, and then one published by Reuters in February this year. And this will give us an idea where the pound, and especially the pound pairs, can go over the next months. And so we will observe, I will show you these forecasts on the pound pairs. And so this will give us an idea where the pounds pairs can go, can move. And then I will give my idea of what we can do starting from now. Because, of course, there are still some uncertainties about the future of UK with the Brexit, if the Brexit will be indeed effective, because for the moment it's not sure. I will explain that. And so I will explain my vision or my outlook for the medium-term perspective. So, and then after that, in just a few minutes, I will give you some brief information about the Max itself. So let's start with the first point, a quick historical summary. I will not mention all the events we have lived since the referendum vote, but the key events, or what for me are the key events. Of course, we have had in June the 3rd in 2016 the Brexit vote, and I remember that 51.89% in the entire UK have voted for the Brexit, of course with diverse results. For example, Ireland and Scotland have voted against the Brexit. They have voted to stay in the European Union. But for the entire UK, so the majority has voted to leave the European Union. And then a few months later, in fact, a few weeks later, Theresa May becomes the new Prime Minister, because, in fact, the Prime Minister at that moment, if I remember correctly, was Cameron, so has has hoped that the Brexit would have been not voted. And so he has resigned, as it is the tradition in UK, and Theresa May succeeded to him. And so she was in charge to implement the Brexit, and she took her time, several months, and it was not only 2017, March 29, that she has activated the Article 50, officially announcing UK would leave the European Union. And so with a date which has been fixed, the first date for the Brexit has been fixed to March 31st of 2019, so this year. And officially starting at that moment, so the negotiation for the Brexit has started. So I will not describe all the different steps during that negotiation phase, but in November 13th of 2018, so an agreement has been established between UK and our May government and the European Union, and so this agreement had to be proposed to the UK Parliament, and it happens after several rounds that the UK Parliament has rejected that agreement. In fact, it has rejected the agreement 3 times, at which moment the situation was becoming extremely difficult for the Prime Minister Theresa May, but at the same time the Brexit has been delayed twice, and the last delay is now October 31st of this year. And so in the meantime, of course, Prime Minister May has resigned. And we all know that since a few days, in fact, July 24th, Boris Johnson becomes the new leader of the party, and so automatically became the new Prime Minister in UK. And Boris Johnson has announced his firm intention to, in fact, make UK leaving the European Union at most for October 31st of this year. Of course, we will have to see if this would be effective or not. But what we can observe is, so these are the main steps, or what I consider as the most significant steps. Of course, we may mention around 30, 40, 50 more steps if we want to go into more details about the history of the Brexit. But these are the most significant, the most key point in that storyline, in fact. And so we can observe what has happened to the pound during the negotiation. First of all, there has been some specialists in UK economy explaining that if UK leaves the European Union, the pound should be devaluated, and they were forecasting at that moment a devaluation of around 15 to 20%, based on the price of UK, of the pound, in relationship with the other currencies. So we will see on some chart what this means, in fact. But during all that period of the negotiations, we have seen very strange movement, or what I call strange movement. In fact, it seemed that the big boys, so who are the big traders in the main banks, I remember that more than 80% of the Forex is controlled by 10 to 12 banks around the world. And so it seemed that they were at least partially playing long the pound in the case of a no-deal Brexit, because this is the big question, in fact. So the negotiation between the European Union and UK had the aim to establish a deal, so how UK will leave the European Union and what the relationship, especially the trade agreement, will become after UK will have left the European Union. And it seems that this agreement has not the favor of some leaders in UK, and this is the reason why they have rejected that agreement. So, but during all that period of the negotiation, despite the fact that it was forecast that the pound should be devaluated, the big boys were at least partially playing long the pound with a no-deal Brexit, and we have seen that by observing simply the chart. Whenever we had an event, a news release, a talk or a speech by someone at the European Union or in UK in favor of a no-deal Brexit, so the pound was strengthening. in the short-term perspective for just a few hours or a few days. And the movement were important in the pound pair, sometimes 100 pips or more. And similarly, when a negative event in relationship with the no-deal Brexit, so in fact when an event confirming a deal Brexit, a soft Brexit, the pound was in fact weakening. And so the pound pair, for most of them, were dropping. But anyway, we have observed some volatility in the pound pair. So in any time frame, you can observe the 5-minute time frame, you can also observe the daily time frame. The pound pair during these 3 years have been essentially volatile. And some time frames were even extremely challenging, if not difficult to trade. For example, the daily time frame was difficult to trade with the pound pairs. So, however, on a long perspective, so they were shorting the pound. The pound has weakened since the Brexit, so the Brexit referendum. And I'm going to show that on some chart on the pound, some pound pairs chart. So, and now it seems that the big boys have somewhat switched to some position which are more in relationship with the reality. And so we know that the pound will most probably continue to weaken because the forecast, some of the forecasts which have been established in the past have been fulfilled, but not all these forecasts. And this shows that the pound has still some potential to weaken. And so it's not a surprise if we see now the big boys hammering the pound since a few days. In fact, since Boris Johnson has been became prime minister, and we can see that on some chart. Let me show first of all here the pound US dollar, for example, or let's take the pound US dollar. So on a monthly time frame, we can see that the pound US dollar has dropped importantly. However, if we observe what has happened starting with the referendum vote, the referendum vote has been here. Yeah, it was right here, sorry, right here on this very big red candle. So we have seen, in fact, in a first step, the pound making a big drop. Oops, sorry, if I unclick the auto scroll button, it will be better. We have seen on a medium-term perspective the pound weakening extremely importantly. And then when we have had the official announcement of the Brexit, with the activation of the Article 50 by Theresa May, we have seen, on the contrary, the pound regaining some strength. Of course, during that pullback, that upward movement in the pound US dollar, other factors must be taken into account also, because a movement in a pair always involves the economy or the differences of two economies, the economies of the countries involved in the pair. So we have also to take account what has happened in USA in that moment. But anyway, the pound has recovered some of its drop. And after some point, so when it was clearer and clearer that the no-deal Brexit was more plausible, so the pound again has dropped. So the pound to dollar has dropped. So, and now we are here at this point, and we can see that the pound has reached a very low level, even compared to the lowest low we have seen in 2016. So here at this point, yeah, after the referendum vote, a few months after the referendum. And so the forecast, some of the forecasts are still showing that the pound may still go lower, in fact. But we can see that in the meantime, during all that time period, we have had some important up movement, even on smaller time frame. If we observe, for example, on the daily time frame, we can see some up movement. These up movement were created by the big boys playing, as I have said, a no-deal Brexit, at least at that moment. So if we observe, for example, on the pound Aussie, we have exactly the same type of movement since the Brexit. So I'm showing here a monthly time frame. We had the referendum, so here, the announcement of the Brexit here. So we had exactly the same types of movement, and now we see the pound Aussie again going downward. Not as much as with the pound US dollar, because we have also an Aussie weakening with a decline in the interest rates in the Aussie dollar. For the pound CAD, for example, we have exactly the same type of movement. So we can see that the recovery phase has been less important in the pound CAD simply because the CAD was stronger with an increase in the interest rate in the CAD. If we consider the pound Swiss has exactly the same type of movement as in the pound US dollar. So a first drop with the vote, it was starting here. So in a first step, so an important drop, then a recovery, and then the second drop with a more important drop these last days, these last weeks. For the pound yen, we'll see exactly the same type of behavior, so we don't need to go into the details of each pair. And the pound kiwi, we have a similar movement, but less importantly, because the kiwi itself is a rather weak currency. So, and we have one pair which is profited from the Brexit, which is the euro pound, because the pound is in the euro pound the quoted currency and not the basis currency as in all the other pairs. And in this case, we are seeing, in fact, an upward movement in the euro pound. That's normal with the pound weakening, so we have the euro pound going upward. And for the Brexit vote, we can see here the referendum, we have seen the euro pound going upward with these long bars going to the upside. And so now we can ask what may happen in a near future. In the near future, I mean in the coming weeks, in the coming months. And so let's have a look, in fact, to what we can consider. So, as you know, during the negotiation period, a lot of people on both sides, especially in the European Union, in fact, have forecast or predicted a collapse of the UK economy with the Brexit, and so an important collapse of the pound. We have seen that the reality is completely different. If we look at another chart, for example, let's have a look here to the FTSE 100, which is the main index for the stock market in UK. And on this chart, we can see that since the Brexit, in fact, the Brexit referendum, which was here on this part of the chart, the FTSE has improved, in fact. And during the last months, in fact, we see that the Brexit, of course, has experienced some drop and some up movement, like all the other indices, but it is not in a bad position. We are still at a very high level in that index. This shows that the important corporates in UK do not seem to suffer from the Brexit. And there is, of course, a reason for that. An important aspect of their business are outside UK. And so the FTSE is not really, the FTSE 100 do not necessarily reflect the real UK economy. However, there are signs we can observe in UK which are the following. So we can observe, if we observe more carefully the different sectors or the different industry in UK, we can see that some have improved, some have weakened. We have other important phenomena which are showing that the economy is not so bad. We have seen a drop in the immigration. Immigration is facilitated by the European Union rules with the Brexit, so the immigration in UK has automatically dropped. Consequently, there is a problem in to fulfill all the job which require to have people. And so we have seen an improvement in the wages, and at the same time, an important decrease in the unemployment. So the unemployment in UK, as in USA, is at an historical minimum level. We have seen also many foreign corporates investing in UK, many big corporates opening new headquarters in UK. And at the same time, during the negotiation for the Brexit, we have seen also UK negotiating new trade deals with many countries, with several countries all over the world. So they prepare, in fact, they are preparing for the future after the Brexit. And so we can conclude that, of course, there are some negative aspects in the UK economy, but also some improvement in the UK economy. So the UK economy is not so bad. Anthony is saying the FTSE is supported by devaluation of the pound. Yeah, that's true, indeed, Anthony. And the reason is because a large part of the activities of the corporate from the FTSE are outside the UK. And so if these companies are making profits outside UK and then they transfer their profits in UK and they change them in UK, devaluated pound, of course, is favorable for the profits of these companies. And this is why, in fact, the FTSE is improving. Generally, we have an inverse relationship between a devaluation of a currency, a drop in the currency, and the behavior of an index, and vice versa. So we can conclude that finally, with all these points, the UK economy is not so bad, not as bad, at least, as predicted by many economists. So, but we can have an idea where the pound pairs can move, in fact. And so I will show here several types of numbers concerning these forecasts. First of all, we can see, so from the chart, for the 7 pairs containing the pound, so where their prices were at the moment of the referendum, when the Article 50 has been activated by Prime Minister May, and so the variation in percentages. And we can see, for example, that between the moment the referendum has been voted and the activation of the Article 50, the pound pairs have dropped approximately around 13 to 15%. The euro pound has climbed 13.1%. It's normal because the pound is the quoted currency in this case, but in all the pairs where the pound is the basis currency, we can see a drop in the price pairs by 12 to 16%. So on average 14-15%. So at the same moment, we can also observe how the price have moved since the referendum to the present moment. So what are the variations in percentages of all these pairs in 3 years, approximately 3 years? And we can see that the euro pound has dropped 19%, so 6% more than from the Article 50 activation, and for all the other pairs, the variations are less obvious. So some of them has seen a drop of 15%, so not so far from the drop since the activation of the Article 15, but some of them have dropped a little more. For example, the pound yen and the pound US dollar have dropped a little more. But now what is interesting to do is to compare these price levels, in fact, with some of the forecast which has been published since the referendum. And so we have general forecast, 2 types of forecast, in fact. We have an optimistic forecast and a pessimistic forecast, or group of forecast. The optimistic group of forecast have forecast a drop of the pound between 5 and 10%. And a more pessimistic forecast has forecast a drop of the pound between 15 and 20%. So we can see for these 4 levels of devaluation, 5, 10, 15, and 20, even 25%, in fact, where the pound should move, in fact. And this is what I'm going to show you. And in the meantime, let's see also the forecast of two other group of institutions. So here we have, so these forecasts, the general forecast I have mentioned, 5%, 10% for the optimistic forecast, and 15-25% for the pessimistic forecast. And I have noted, so the numbers here, and these devaluations are related, in fact, to the price of the pound pairs at the moment of the referendum. I have taken the close price before the release of the result of the referendum. So, and two more specific forecasts are the following. First of all, a forecast by the Bank of England in November 28 last year. And the forecast has been, in fact, a drop of around 25% of the pound. And you can see that 25% represent also the extreme level of the pessimistic group of forecasts in the previous year slide. And another group of forecasts, which is a typical type of forecast, is the forecast given in February this year by Reuters, published by Reuters, making a forecast between 5% and 10% in relationship with the price given at the moment when Reuters has published this analysis. Not 5 to 10% from the referendum day, but from the Reuters analysis. And so these are the levels we can have, we can also report on or draw on the chart. And I'm going to show these levels now on some chart, or at least some of them. So let's go back on MetaTrader, and I will first of all consider the euro pound. And so I will apply on my euro pound pair a specific template with these levels, and we can see. So the yellow line represents, if I'm right, the level of the pair at the moment of the Brexit referendum. It corresponds to the close in the daily or the weekly time frame when we had the referendum, the day of the referendum, and the long bar we have seen after was when we begin to have the result of the referendum. So this was the price level just before the release of the referendum result. And we have here a devaluation of the pound of 5%, this is the first red line, 10% for the second line, 15% for the third line, and 25% for the last line, in fact. And we can see that for the moment, the price of the euro pound has climbed, and now it's between the forecast of 15 and 25%. So we are in the area of the more pessimistic forecast. And we can see that we have still some potential movement to the upside. And so, and seeing the momentum we are having since a few weeks now, accelerating since the nomination of Boris Johnson as the new Prime Minister, it makes sense to consider that the pound can reach that level of devaluation, so 25% devaluation since the price, the pair head at the moment of the Brexit referendum. And this corresponds, in this case, almost to the top the price has made, in fact, just after the publication of the referendum vote. So this gives an idea for the euro pound that the pound can still possibly weaken. Now, of course, it will depend also of what the euro will be. But in the context of the European Union and the UK Brexit, if the pound should weaken, I think this will contribute to perhaps strengthen the euro. But we never know, because this is a very complex problem. It may happen also that later the euro will also weaken. So, because the Brexit may have some negative impact also on the European Union. One thing which tell me this is, you know that Boris Johnson has announced that he wants complete renegotiation of the Brexit deal, and so otherwise he will force a no-deal Brexit. And he is already using a very important argument, which is the money argument. You know that with Cameron the UK has engaged on some monetary participation in 2020, 22, 21, 22, representing an amount of approximately a little more than 40 billion euros, between 40 and 45. I don't know exactly the right number. There was some uncertainty on the right number, but the order of magnitude is around 40 billion euros. And if UK does not pay that amount, this will represent, in fact, an important problem, not for UK, but for the European Union, because it will be an important miss in their budget, and they will face important financial difficulties. And so Boris Johnson is now using a very strong argument to try to force the European Union responsible to go in favor of a better negotiation, a better deal for UK. Now, if we consider the pound Aussie similarly, so the pound Aussie, we can see that now the price is moving downwards, and the price of the pound Aussie has dropped only 10%. But we can see that there is still some potential for a down movement. But this potential for a down movement, a continuation of the drop in the pound Aussie, must be mitigated by the Aussie dollar, who is also weakening. And so the drop in the pound Aussie should be perhaps less than in some other pairs where the two currencies have very low interest rates. But we can still see that there is some potential for the pound Aussie on the long-term perspective to continue to drop. On the pound card, here we can see that we are at a level of around 20%, 5, 10, 15% devaluation. So, and the price is clearly oriented to the downside. Yeah, indeed, Anthony, and this is why the comparison of the potential movement which still remain in one direction becomes more difficult to consider. And we can see that for a 25% devaluation, the price must still move a lot of way here. And the lowest low here after the referendum is not too far away. It's a mid-distance between these two last forecasts. For the pound Swiss, we see another picture, a different picture. We can see that the devaluation is well oriented to the downside, which is not a surprise. Why? Because in the case of the pound Swiss, whenever we have a problem in a currency or a group of currencies, in fact, the Swiss is one of the currency, with the yen, by the way, which will be favored by the big boys. The Swiss and the yen are the two currencies where they will move some of their position. They will go long the Swiss or the yen when they perceive higher risk in the market. And so it's not so a surprise to see the momentum in the pound Swiss increasing to the downside. So it would not be a surprise to see on the long-term perspective, if I take the monthly time frame, to see the price moving in the proximity of this 25% level, which will be just a little after the lowest low here we have seen after the referendum announcement. So this is for the pound Swiss. And for the pound yen, we should see something similar. Indeed, for the pound yen, the yen having the same behavior than the Swiss. In the case, the big boys switch from risk on to risk off. And so we see here that the 25% level of devaluation corresponds also to the lowest low we have seen since the referendum. And the momentum is oriented to that direction. So I would not be surprised to see the price reaching that level or the proximity of this level. So, and for the pound Kiwi, the Kiwi is also a weak currency. So we are at mid-distance, in fact, from the moment the price has reached for the referendum announcement and the lowest forecast. So I would not be surprised to see the pound Kiwi not going so far away to the downside. It should go less lower than the other pair. So, but clearly we can see the level where the price can go. I would not be surprised to see this level of 15% devaluation. So, and the pound US dollar, here we are also oriented to the downside. We passed away from the 15% level, and the price is clearly oriented to the downside, and it's almost at the level of the lowest low after the referendum votes announcement. So the momentum is clearly to the downside. Will the price reach the 25% level? I don't know, because the US dollar has also some possible problem with the cut rate in the US dollar and possibly future cut rates in this currency in the coming months. We are not sure of that. This will make the US dollar weaker, and so this will not contribute for the pound US dollar to continue to go downward so importantly. So we can see clearly that the forecasts which have been given during all these 3 years, so since the referendum vote, either they are optimistic or pessimistic, were pretty good forecasts, and they are still good forecasts. In fact, it seems that the pessimistic forecasts are in action now. And if indeed the UK economy should weaken in the coming months after the Brexit will be effective, so we should see the pound still continuing to weaken and probably achieve the worst level of devaluation. So is all this information I have shown clear enough? So, any questions about what I have explained up to now? Showing that we still have some potential for the pound to, in fact, weaken in reality. Okay, thanks. Yes, of course, Anthony, I will not go into the details of each country. Of course, if we want to have a better idea on a medium, long-term perspective, we should, for each pair, analyze all the aspects of the two countries, so the monetary policy by their central banks, the fiscal policy by the country, the government of the country, the different countries, the general economy behavior. Is the economy improving? Is the economy decelerating, expanding, or contracting, or is the country or the area entering into financial or monetary crisis or economical crisis or recession? All these countries participating to these 8 currencies are in different situations. Some of them are worse than the other, some are a little better than the other, but we should make a more detailed analysis, of course, in order to have a more detailed idea where the price can go. But having the general picture already help here to see that we still have some potential for the pound to continue to weaken. So what should we do, in fact? So from now on, so we have observed the forecast on the pound pairs. And so what should we do now? Because in fact, it's not so easy to forecast what the pound pairs can do in the future, in the near future, in a few days, in a few weeks, even in a very few months. But my approach would be the following. So, Boris Johnson has clearly made some announcement, or several announcements. If you have followed the news in UK, so he has spoken about, of course, the Brexit situation, his will to renegotiate the conditions of the deal. He wants to drop entirely from the deal the backstop problem, but he forgets also the will of Scotland and Ireland. They will never accept to, they don't accept for the moment to leave the European Union. They do not accept to have a new physical border between the two islands, even if Johnson has promised to not re-establish a physical border. He has spoken about general economy, about security, about health and a lot of about social problems, so a lot of subject. So the problem is, will he keep his word? Or at some point, will he be influenced by some lobbies, some pressure? We are seeing some pressure being established. For example, the Americans begin to make some pressure to avoid re-establishing a physical border between the two islands. The Irish lobbies in USA are extremely powerful, and so they try to make some, or to have some influence in the process. So will he be able to keep his word, or will he be forced to adapt to some more practical situations? So we will have to observe the first action, the first decision he will take with his government, and how the market will react. This will be extremely important. With the first action the government will take and the reaction of the market, we will have a better idea what the big boys' intentions are. Are the big boys still betting for a no-deal Brexit, or do they change their mind and they will bet for a soft Brexit? And so for the moment, I'm not able to predict what they will do. We need to wait, to be patient, and to wait for the first actions and reaction in the market. And so in a few days, we will be fixed about this point. On a medium-term perspective, time horizon, I will personally watch much more carefully all the UK fundamentals and macroeconomics to see if there is an improvement or not, even at least partially, of the UK economy, and see how the market will react to these fundamentals evolution. And so, depending on how these fundamentals will evolve, if they evolve favorably, this will be good for the UK economy. Of course, it will be good for the UK economy, otherwise the fundamental will not progress. The fundamentals are simply mirrors of what the economy is really. And so we will have to trade accordingly. And so, with a weakening of the fundamentals, we can continue to short the pound. With an improvement of the fundamentals, we will be able to consider going long with the pound. But on a medium and long-term perspective, because I believe, and the history has always shown that, yes, but the pound stays slightly range-bound. It depends what you call range-bound, because we may have a very large range, okay? And depending on, it's not easy. It's not easy for the investors and the big boys necessarily to make a strict decision, a fast decision. It will take time to have the clear direction the UK economy will take. Personally, but this is just my personal opinion, okay? I may be completely wrong, and I am often wrong in my prediction, by the way. But my sentiment is the following. UK has always demonstrated it's a very long history that it was very strong to recover from any situation. So, because UK population or people is a great people, and they are extremely good in some types of business, in some types of moving their economy. And so, or the 4-hour range, but the 4-hour range is a small time frame in that perspective. You need to have a perspective, a more larger perspective. In this type of time frame, the 4-hour, the 1 hour, the daily, trading the pound pair may still be perhaps a bit difficult. Okay? So for the moment, I consider only trading the pound pair on small time frames, the 5-minute, the 15-minute, or on higher time frame like the weekly or the monthly time frame. Now, personally, I don't trade the weekly and the monthly, but for those who want to invest on a longer time frame, so the weekly or the monthly time frame should be adequate. But my opinion is the following. In a few months, we should see now the consequence, perhaps next year, we will be quickly next year, we should see most probably the first sign of an improvement in the UK economy, because UK finally has taken a lot of measures to be protected from the negative aspect of the Brexit. And so the economy should improve, not necessarily in all the economic sectors of UK. Some sectors will improve better than others. Whenever there is an important change in a country or in an area, there are profound changes also in the structure of the economy. So it can be something new in the country, but still profitable on the long-term perspective. And so with a UK economy improving in the future, we should see also on the long-term perspective the pound improving, so the pound strengthening. And so for the future, despite all the difficulties this situation may have, and for a few months there may be big difficulties, so we should expect some volatility for a few months. So I'm very optimistic for the pound. So this is the last word I will say about the Brexit. Let me now just quickly give you some word about the MAX, how we can profit from the movement we can see, because if we have some volatility, we will have some movement. We should see some movement, at least in the pound pair, at least in the small or average time frame. So with the MAX, we offer generally 5 levels of the MAX in terms of courses, and the 2 courses we regularly offer to people who are interested to learn how to trade. We offer the Max ETF Primer course and the Max ETF Standard course. We will have a new cycle, of course, starting in September, so next month, and of course you will be informed when these 2 courses will start, so in September, and we will make a presentation of these 2 courses. And once the Max ETF Standard course at least has been taken, you may have access to the 2 other more advanced level of the Max, which are the ETF Advanced course and the ETF SUM course, which helps to improve the result, not only to improve the process, the trading process, but also to improve the reward to risk ratio we obtain with the Max. And especially in these high volatile moments, the Max ETF SUM is really making great. Sometimes it's more challenging to trade with the Max Primer, easier with the Max Standard, but fine with the Max ETF SUM. And on this slide, you see the difference between the Max ETF and the Max ETF Standard and the Max ETF Primer course. The Max ETF Primer course has the aim to give a first taste of what the Max may be, with just a very limited set of training sessions, a limited set of entry setups, a very limited set of exit setup, and a very basic money management, effective but a basic one. And with the Standard, we have all the entries and the exit setup taught during many more sessions. We have 7 sessions plus a bonus sessions, and we have a very specific process to make scalings along a trade in order to increase the profits we can extract from a movement without necessarily increasing the risk from that movement, and with a more advanced trade risk management and money management. All the courses can be taken live, but they can be taken also by video. Each training session is recorded and the video made available. And the great feature of the Max course is, whatever the levels a student is following, is the homework assignment. Each session we have homework the student must make, and this homework has the aim for the student to validate his or her understanding of the concept and the rules of the Max. And so here we will start the Standard course around the 7th of September. We don't have a precise date for the moment, but it will start at the beginning of September for 7 weeks. And you have here an idea of the price with the discount we make usually for the webinar's presentation. And you have here a link to enroll. You can enroll before we make the presentation. Of course, you can follow the course by video if you want. And here, so the Max ETF Primer course, so it will also start around September 10th for 2 sessions. The first session at one specific date, and the second session 2 weeks later. And you see here the price of this level of the course and some package we have. And again, also the link. And here we have the recap page for these two levels of the max. Okay, I hope you have enjoyed this presentation. If you have some remark or if you have some questions, so Craig, Chris, and myself are at your disposal so to answer these questions. Well, Anthony is asking, would you like to know your thinking regarding the big break in UN today and impact on the group? Indeed, this situation is not a so easy situation because with the Chinese, we never know exactly what they have in mind, and we know that they manipulate a lot their market. They manipulate a lot the informations they release. But what is sure is we are living now an escalation in the trade war between USA and China. And so I hope they will de-escalate. I don't know what is the exact term in English, so they will reverse the process and find some agreement. But the impact of a devaluation in the yuan will certainly improve their exportation. So de-escalate. Yeah, thanks, Chris and Craig. Whenever a country devaluates its currency, this improves, in fact, its exportations. It makes their importation more difficult, of course, but generally the devaluation of the currency is a powerful weapon each country has to adjust their economy. The problem is, in fact, the trade war and the tariffs war, in fact. So what will be the impact if Trump indeed applies these tariffs he has mentioned? This will make the Chinese exportation to USA much more difficult. So for the moment it's difficult to evaluate the impact. So the economy, the Chinese economy will probably slow down, continue to slow down, and this will have an impact on the entire world, even here in Europe. So we will have to see. So because probably China and USA are in a kind of poker game for the moment. So who will be the strongest? So, and yes, the China holds a massive amount of US Treasury, which may constitute indeed another powerful weapon in the hands of China. In fact, so. Patty is asking, quick question, if one already has a grasp of the Forex, what do you recommend for the next step of study the ETF primer? No, not the ETF primer. The ETF primer is just a first contact with the max. It's a very basic approach of the max. It's a profitable one, but you will have not a lot of opportunities to trade because we teach a very limited set of entry setups, and so you will not get a lot of opportunities regularly. If you have a good idea what the movement may be, or at least their direction, the best level to use from the max is the max ETF standard. And even better after the max ETF standard, the max ETF sum. We have max graduate trading presently with the max ETF sum, which are producing exceptional reward to risk ratio between 10 and 30 hours per week. I don't say all the max graduates achieve these results, but we have some of them achieving these results because they make also their homework. They prepare their trading session taking into consideration so the geopolitical aspect, the news release aspect, the central bank decision aspect, and so on. And then all these aspects help them to define a directional bias for each day they intend to trade. And then when they have a directional bias, they can time their trade with either the max ETF standard or the max ETF sum. And in such a case, they achieve nice results. So the context is always, I have always said, the context And I will never stop to say that the context is the most important aspect in trading. We can be wrong, of course, in establishing a context, in understanding a context, because it's impossible to have all the elements, to know all the elements we need to know. But at least if we make the effort to understand the main point of the context, so at least we increase our odds, we increase our edges to get nice trade. Never 100% winning rate, but a high winning rate, and more importantly, because for me the winning rate is just a psychological aspect of trading, a high reward to risk ratio. This is what is the most important for me. So, and in order to help our students to understand all these factors, on our website, I'm going to show you that very quickly. On our website, we publish on the page www.maxtradingsystem.com/newswatch. So we update every week some elements of geopolitical we have to pay attention. So, and then we publish a simplified economical calendar with only the news which are really important, those which have an impact in the forex when we have a big surprise. And so all the major news are the news which are really important. In fact, many news are analyzed a lot by many specialists, but they have never an impact in the market, at least in the forex. They may have an impact in other markets, but not in the forex. And then we publish also, in order to increase the odds to catch nice movement, because we are trend traders, and to be a trend trader, we need to have trends. We publish each week also the list of the best moving pairs. This list sometimes changes. It depends on essentially of the volatility of the moment. And we publish also in relationship with the news release present in our calendar, we publish also for each day of the week, of the coming week, a suggestion of pairs to consider. For example, today, the pairs we suggested to monitor and to trade were the pound US dollar, the pound yen, the pound Swiss, and the euro pound. Tomorrow will be the pound Aussie, the pound Kiwi, the euro Aussie, the pound yen, and so on and so on. And all these informations are updated every weekend. So, and below we have a small text explaining how to interpret all these informations we publish for free of charge. So you can watch, read these information. So for free, just go on this website page. So www.maxtradingsystem.com/newswatch. And we have also the same information of the previous weeks. We have so several weeks in the past, and so such a way you can follow if these informations are worthwhile or not. So, so I see some other questions. For us recent standard graduate, how do you suggest we make the transition to some trading wise? You don't need to be in a hurry, bold dev. Make sure to master enough the max ETF standard, because the max ETF sum relies on the max standard. We go more into the details of the price action, and so you need to master the max standard before considering the max sum. Okay. And so Anthony suggests to have a look at extraordinary long and short-term conditions in US dollar SGD, which is the Singaporean dollars, just now developing. Yes, sure, Anthony. There is always something happening somewhere, and so, but we have to make a choice of the pairs we are trading. We cannot trade everything, but we need to have a larger perspective than just monitoring some pair. So, and my opinion as a trader, as a full-time trader, is having a larger perspective to really understand what is happening in the market and the influence between the different markets. Is we need to have a look in the bonds market, in the equities market, in the commodities market, in the forex market, of course. And so all these four markets are in relationship. And so by observing these four markets, we can see where the money, the big money, the smart money is flowing. And when we see the money flowing from one market to another market, we can try to understand why. For example, when the big boys perceive much more risk presently than in the past, they will have a tendency to invest more in the bonds market, when they have safer yields, than in more risky assets. When they are risk-on, they can invest in more risky assets. So the relationships are complex. For example, it's not because the price of gold is going upward that it's a sign of inflation. It's simply perhaps a sign of risk of any other kind. And so this is why you need to keep also your ears open to know what is happening around the world. It's clear that what is happening in the Middle East for the moment, with another kind of escalation between Iran and USA and some other countries in Europe, may be a very, very risky situation and may have a deep impact in the price of oil and so in all the other markets. So we have to pay attention to all these main countries and to understand their relationships. So thanks for all these comments, Anthony. I really, really appreciate. So they are important for serious traders. Trading is a business. It's not a hobby. Okay, if there are no other questions, so I thank you. No, you don't need to be sorry, Anthony. It's always interesting. I thank you very much for the time you have invested in this presentation. I hope you have enjoyed and you have found this information useful for your trading. I wish you a great week. Have a nice trade. Be prudent in your trade, and so see you during our next event. So, and in the meantime, take care. Bye, everyone.